Tesla and SMCI are absolutely mooning today. We're going to break down everything that you have to know about both of those companies in this video right here today. SMCI up 11% today, pretty much flat after hours, and Tesla is mooning again too, up 3.8%. Is all of this sustainable? Are they a bubble? Are they going to keep going higher? All of that's going to be broken down in this video right here. So we're going to dive into my alpha report, 100% free, and you can see right here I broke down Tesla and SMCI. So let's go through this right now and see what's really going on. So I usually start out with the heat map. You could see that Nvidia went red today, and the main reason why Nvidia went red is because they reported earnings yesterday. Their earnings were honestly really good. If you want to see my breakdown on that, look at the alpha report that I shot out yesterday, the day before this episode right here. I break it all down. Honestly, Nvidia earnings were good, but there's just such high expectations built into that stock, and it's really hard to just smash these super high expectations. I mean, Nvidia is trading at like a P ratio of 50 right now. It's not necessarily cheap, but it's not really super expensive either because there's so much good stuff that's going on for this company. And if you really want to play AI, you really want to get into these chips that they're making, and there's so many companies out there that want the Nvidia chip. There's really no competition for it. So Nvidia, in my opinion, I think they're just getting started. I think if you have a long-term investment horizon, you can make a crap ton of money on Nvidia. I'm going to show you my watch list on the bottom of this alpha report in just a little bit. I have Nvidia on there, and I'm going to show you some trades that I do like for Nvidia right now, along with a bunch of other companies too, including Tesla and including SMCI. So, major news today, there is a big SMCI catalyst that we're going to break down in just a second. We're going to break down the future for Tesla, and then we're going to dive into the watch list like I just said. So heading over to the Fear of Greed Index for today, it was 58 yesterday and it's 61 right now. 50 is pretty much neutral right here in the middle. We're around 61 right now like I just said. And remember, you want to be greedy when other people are fearful, and you want to be fearful when other people are greedy. So people are greedy right now, but it's not really extreme greed. So I wouldn't say that you need to be exactly like fearful right now, but it is on a slightly lofty side. I feel like the market's a little bit overvalued. So breaking down Tesla right here. So Tesla's up 62% in the last month. Trump got elected. Elon and Trump are pretty much best buds right now. So what does that really mean for Tesla? I mean, does that actually affect the bottom line for Tesla? In the short term, no. In my opinion, it does not. But in the long term, it really could have huge implications for Tesla. So let's dive into Tesla right now. We're going to go into SMCI, and then we're going to go into my watch list to show you a couple trades like I just said. So there's so many people out there asking me, is it too late to buy into Tesla right now at this expensive level? I mean, Tesla right now, it's $352. Yeah, it's expensive. Yeah, the P ratio is super high, but is it too late to invest in Tesla? And I respond back to them with the exact same answer every single time. How long do you plan to hold the stock for? If you want to hold the stock for maybe 1 to 2 years, I say definitely not, do not buy into the company. But if you plan to hold it for 5 to 10 years, then I would say yes, it could be a solid buy. But there's two very important things that you really have to understand before you buy into Tesla. I'm going to go into that in just a second right here below. So you never want to buy into something just because the share price is going up. You got to understand exactly what you're buying and at what valuation level you're investing at. Just because it's a good company, that doesn't mean it's a good buy, because what if it's trading for some astronomical price that is totally not justified and worth it? So you really got to understand what you're buying and at what price level. So Tesla right now is trading at a PE ratio of 141. The market cap of Tesla right now is $1 trillion. So let's just say, hypothetically speaking, you have $1 trillion in cash just sitting on the side and you're ready to blow it. If you were to go buy Tesla outright, the entire company, every single share, you own the entire company of Tesla, you pay $1 trillion for it, how long is it going to take you to get your $1 trillion back in the way of earnings and profits? How many years is it going to take for you to earn $1 trillion of profits from Tesla? That is what the PE ratio is. It would take you 141 years to get your initial investment back on Tesla right now if you were to buy the entire company outright. And if you buy the entire company outright, or you just buy one share, it's the same thing. You're still paying for a sliver of the earnings, whether you get a little sliver with one share or you get all the earnings if you buy all the shares. It's the same exact thing. So when you buy into Tesla, P ratio of 141, right now it's a little bit lofty, and that's looking backwards at the last 12 months of earnings. But now people are going to say, but Brandon, we're going to have Optimus and we're going to have the Robotaxi come out. And you're right, earnings in my opinion are going to go way up into the future. But is that going to happen for 2025? I doubt it. 2026, maybe, and 2027, probably. So that's why I say if you're going to buy into Tesla, I think the next 1 to 3 years is probably going to be bumpy, especially at the PE ratio of 141. It is a little bit lofty in the short term, but in the long run, I think the Tesla can go way up, and I'm going to show you my 2030 price target for Tesla in just a second. But just know in the back of your head that the Tesla valuation is pretty much based on Robotaxi and the Optimus robot going mainstream. If it does go mainstream, I think the Tesla is going to absolutely skyrocket in price. But if it doesn't, I think the share price is probably going to fall in price. But I do think it is going to go mainstream. I just think it's going to take a couple more years. And keep in mind, the market is usually forward looking by roughly 1 year. So looking forward maybe 3 or 4 years to grab all these earnings and bring them backwards, I think it's a little bit too lofty to kind of price that into the stock right now. I mean, Robotaxi is probably 2 years away, but Optimus is probably 5 years away. But now the question is, do you want to buy into Tesla right now? So if you could pass these two tests, I think it's okay to buy into Tesla. So you must hold the shares for a minimum of 5 years from right now. If you can't hold them for 5 years, I don't recommend that you buy in. And the second part is you must be able to stomach 60% swings in the share price. Short term, like I said, I think it's going to be bumpy, but long term, the stock could move astronomically. And my 2030 price target is $1,200. I think the Robotaxi is going to be very, very profitable for Tesla. And for the Optimus humanoid robot, I really think it's going to just blow everything out of the water. You know, it's one thing to build a robot and it's one thing to build a Robotaxi, but to build it at scale and produce millions of them every single year, I think that Tesla is positioned to be one of the best companies to be able to do both of those things right there. All right, so let's talk about SMCI. You guys know that I bought call options on SMCI if you're in my Discord. We're absolutely printing and mooning on that trade right there. So congrats to everybody that got in on that play with me. But SMCI, I don't think it's really what you guys think it is. So let's break it down right now, and we're going to look at why I think SMCI could actually go higher than what the previous all-time high was. You can see on this chart right here, the all-time high was somewhere around 125 per share. Right now we're trading at 33 bucks per share. I think that SMCI is going to return to the all-time high, which was right here, and I do think it's going to even blow past that eventually. So SMCI peaked out around 125 per share, and it's been on this huge decline ever since. And the reason why SMCI was going down is because they were getting hit with accounting fraud. Their accounting firm pulled out. They said there's too much fraudulent stuff going on. But SMCI recently got a new accounting firm. They brought him in, and the new accounting firm basically got to pull out SMCI's books. They got to look at him and say, okay, I think we could fix this. So now we're going to bring you on as a client. So the fact that that accounting firm even took on SMCI as a customer after looking at their books shows that there is a little bit of promise in this play, showing you that SMCI might not be as bad as what we think. So when a company like Tesla says, we need to get a cluster of NVIDIA chips because maybe we want to train full self-driving on the robotaxis, NVIDIA says, okay, here's our chips, but these are just the chips. There's really no housing for the chips. So that is what the server racks are. They're literally like shelves, and these shelves are designed to house these NVIDIA chips. So basically you just take the NVIDIA chip, you put it into the server rack, and it becomes all integrated into one system. So you get the cooling aspect, you get the integration aspect, and you get to put these chips in a tight space. Imagine having a bunch of little things that get really hot together, but then you're effectively able to keep them cool. So there's so many data centers that are in the process of integrating the new NVIDIA Blackwell chip. And here's the deal with the new NVIDIA Blackwell chip. There is a rumor that it's been overheating. So guess what? It's been overheating with these air-cooled racks that SMCI has been making recently, but all these air-cooled racks are eventually going to move to liquid-cooled racks. So what does that mean? All these data centers that are out there right now that are all air-cooled, guess what they're going to do? They're eventually going to integrate the new Blackwell chip from NVIDIA because it's so much better, it's more efficient, it's more powerful, and guess what? That chip runs hot. So is that chip really going to be able to plug into any other company's air-cooled server rack? Probably not going forward. So now there's going to be this big push for liquid-cooled server racks going into the future. And guess what? SMCI is positioned perfectly to be able to capitalize on this opportunity. There's so many servers out there that really have crappy server racks from the get-go. So they're either going to implement SMCI's air-cooled server racks or they're going to implement their liquid-cooled server racks. I mean, there is competition out there, for example, with Dell. But Dell, this is just a very small percent of their company. They don't really focus hard on server racks. Literally all SMCI does is server racks, and they are the dominant player in the field. So if you believe in AI, you believe AI is going to be the future, which I do. I feel like you either integrate AI or you get left behind. There's going to be a lot of demand for these server racks, and that's what SMCI does. Keep this in mind right here too. If you want to get an SMCI air-cooled server rack right now, it's a roughly 1 to 2 year wait to get that integrated into your data center. So the fact that there's a 1 to 2 year wait, that shows there's demand for this product, and that shows that they have pricing power. They can raise their prices, they can make more margin. That is good, that's what we want. So SMCI, it's been getting smoked in the short term. I feel like it's very, very cheap right now. That's why I bought calls. I may even buy more calls if we get a little bit of a dip. And I feel like right now the intrinsic value of SMCI is somewhere between 80 to 100 bucks per share currently. But as these quarters continue to come out, as they're reporting earnings, as they have this new accounting firm backing what these earnings are, I feel like SMCI is going to get credibility back. I feel like the earnings are going to be strong, and I feel like the stock is going to go way higher. So now you're going to say, well, what is the risk to SMCI? So SMCI, yes, they have the accounting issue. What if the accounting firm that came in, they pull out because they're like, oh, well, when we did this little brief dive into it before we accepted you as a customer, everything looked good. But now that they get deeper into their numbers, what if they're like, holy crap, there's no way we could certify this stuff, so we're going to pull out. And it said right here, if that happens, I would expect a 40% drop in 1 day in SMCI. So it is risky to buy an SMCI right now. I mean, the risk and the bet that I'm making is that the accounting is going to be okay. They're going to get it sorted out. Server racks are going to be big going into the future. They're going to go from air cold to liquid cold. The Blackwell chip runs hot. Everybody's going to want the Blackwell chip. And pretty much if you want to get the Blackwell chip, you're probably going to need a liquid cold server rack, which SMCI is the number one player for that. So I feel like the stock can go way up. I put my money where my mouth is, and I'm making a bunch of money, and everyone in my Discord is making a bunch of money too. I put this little funny meme here because it's like, we're making money right now. It feels good to do it. I made a tweet right here. I spend the majority of my money buying more money. What that means is I take my money, I invest my money, and then the money that I invest makes more money, and it's just a snowball cycle right there. So these are the stocks right here on my watch list, and these are my 2025 price targets for end of year. I'm not going to read all that to you. You could just pause or you could go back to see that right there. And then my favorite trades for right now, basically, Triple Q, VOO, SOX, just dollar cost average into those. Tesla, I like the dollar cost average into that too. But remember that 5-year hold period. Palantir, I think it's a little bit lofty right now. Go back a couple issues on my Alpha report. You'll see my full breakdown on Palantir. I do think it's a little bit lofty. I'm not saying it's going to go down right away, but this is a potential play right here if you want to make it. I think the Google is a little bit cheap right here too. I did break down in the previous issue to this one what's going on with Google and are they going to potentially have to sell Chrome. I break all that down. I feel like NVIDIA is the future, so there's a couple plays right here that I personally like and I might make them too. Amazon also, and SMCI, we just talked about it. You know what I like with that. And then checking out right here my rate of return. So from 2023 to right now, my annualized rate of return is 63.8% per year. Totally crushing the market. I'm this top blue line right here. Yeah, I have a little bit more volatility, but guess what? Look where we started and look where we ended. Totally smoking the market. Definitely check out my Alpha report. It's 100% free. I send it out every day that the market's open. You get my full shebang on what I think happened in the market that day. And then my trading account right now, $898,000 like you guys know. I do feel like the market's maybe 10% overvalued right now. So I feel like the intrinsic value is somewhere around 800K, not 898,000 bucks. So keep that in mind. If we do get a little bit of a dip in the stock market, totally fine, totally acceptable. If you want to learn about my free intrinsic value calculator, I'm going to put a video right here. It's going to break down how to get it for free and exactly how to use it. This tool I use for every stock play that I make. It really helps me value a company. So with that being said, I'll see you guys in the next one.